Right now, gold is trading at $2,050 per ounce, within $30 of the all-time record highs. We have silver broken above $25 per ounce. Oil prices, they're currently breaking back above $77 per barrel. Platinum is breaking above $945 per ounce. Palladium is breaking above $1,075 per ounce. We currently have 20 positions on these commodities with our clients at the Gold and Silver Club. There's been multiple opportunities over the last month to stack, buy nice and low, and now capitalize on this slingshot move higher that we're getting across multiple commodities, the precious metals and energies, and we haven't even hit the month of December yet. So as we get towards the end of this week and then into next week, there's going to be back-to-back opportunities for you to capitalize on. Next week, we have the non-farm payroll data on the Friday. As we then transition into the month of December, we have the final Federal Reserve meeting of the year, the final European Central Bank meeting, the final Bank of England meeting, the final GDP data, and the final PCE data as well, the Fed's preferred measure of inflation. This sets up massively for the month of December, the run that we're already seeing here on multiple commodities. So as we've been discussing with you on the reports here, we are exclusively on the long side with multiple commodities. So we've now stacked into 20 positions with our clients at the Gold and Silver Club, ready to take on the month of December. Oil is provided yet again more opportunities to stack nice and low. In fact, we're taking the opportunity to add 2 more positions on oil this week. It pulled back towards $74 at the start of this week. So we added further positions and we're now breaking out above $77 per barrel. It's been actually similar with gold as well. We're taking the opportunity to even top up at the start of this week at $2,014 per ounce with our clients. That trade is currently up already 270 points in the last 24 hours, but we've built into multiple positions across palladium, platinum, gold, silver, crude oil, and now we're really starting to see these commodities gather momentum to the upside. So as you know, the month of November, it typically gives you great opportunities to buy in at lower prices. We've definitely seen that. We've got the Thanksgiving lull, the Black Friday pullback. We saw that, of course, across energies in particular, oil breaking down. Palladium the previous week broke down to 5-year lows. Platinum, it broke down to 6-month lows over the month of November. There's been further opportunities to add to gold, to add to silver. And of course, platinum throughout the month of November has given plenty of time to stack under $900 per ounce. So yet again, the commodity markets have proven themselves to be the most profitable by actively managing the portfolio. So again, this comes back to what all of the major Wall Street banks have been stating. Goldman Sachs, JP Morgan, Bank of America. We are now transitioning into the golden age of trading. We're actively managing your portfolio. That is where you're going to outperform the market. We're no longer in just a buy and hold market. You want to, of course, buy as low as possible, then capitalize on these impulse moves higher that we get. We're currently seeing that obviously on multiple commodities. Right now, gold breaking out, silver breaking out, oil now breaking out from the swing lows as well. So you capitalize on those large upswings, and this is where you're able to then bank your windfall amount of profit at the right point in the cycle as we hit historically one of the most profitable points of the year for commodity traders as we transition into the month of December, which we definitely do not want you to miss out on. If you're not making money on commodities right now, you absolutely should be. This comes down to utilizing a professional, research-driven approach. This is where you want to learn the daily, weekly, monthly, quarterly, real-time, data-driven cycle for each commodity. Definitely ditch those outdated technical analysis strategies because they're not going to give you any sort of an edge at all. You want to be utilizing data, statistics, and market intelligence. Further align this with the capital flows in the market, the key areas of liquidity that are targeted so you can get your sniper entries in. Plenty of opportunity to do that recently on palladium, platinum, and also crude oil, and before that, gold, silver, and so forth. There's been lots of opportunities to capitalize on the recent lows and now benefit from the big upswing that we're getting across multiple commodities. Further align that with the geopolitics, the fundamentals, the macroeconomics, of course, the intermarket correlations, the ratios in the market, and then finally compound that with how the hedge funds, the money managers, the banks and institutions, how they're all positioned in the market in real time. That is going to help you massively to get an edge. So with that, if you would like to join our community of successful traders, learn the professional research-driven approach to the market and join our professional mentorship program, there is an opportunity for you to do so. Just make sure you click in the link below today's report in order to make an application to join our professional mentorship program.